Jorge, welcome. I hope you heard some of what the gentleman from the Chinese National Oil Offshore Company said. The expectation for the year ahead, he saw peak oil products demand, gasoline and diesel in China, and a oil Brent of 70 to 75. Still holding on to the line of China 5% growth. Let's perhaps start there. You're in Singapore today. You've been all over Asia over the holiday season. I've been enjoying your cups of tea of the Vietnamese paddy fields and all the others. Very jealous, of course. But let's first start in China and then wander around the region with you. Your outlook for China on the year ahead.
Yeah, my outlook on China for the year ahead was very negative. And I have been in China for 3 times in the second half of the year. And I have sampled Beijing, the area near Shanghai, and deep in the hinterlands in Chongqing. But I do always reform my opinion if data starts to look a little bit different. So I initially was extremely negative, and of course, I didn't believe the official numbers on the rate of growth. In fact, initially, my perception was that there hadn't been growth for 2 or 3 years in places like Shanghai. And of course, in other areas it's different, but in that major metropolitan area, it's like time stood still. But China has made a great effort in setting the steps to inject liquidity into markets, reduce interest rates, and essentially kickstart even consumer demand by giving credits if you buy a new car and things like that. And my initial observations is that it is working. The number of sales of these durable goods, which I would call a car a durable good, is going up quite a bit. And that creates an impact down the chain because you need to buy some metals, you need to buy some copper, you need to buy wiring, you need to buy lights, you need to buy all of these things. So the Chinese economy, because of the central government intervention, is waking up.
Is it waking up sufficiently? We're seeing the early New Year data now with sort of big red flashing lights regarding deflation, the outlook, the 10-year bond outlook moving into negative territory. This is Japan 1990, no?
Yes. There is, like in anything, always two ways of looking at it. In the West, we have a crisis, in a way, with interest rates rising too fast. In China, we have the opposite. And the reason we have the opposite in China is because there's a lot of cash infusion by the central government, which then results in people buying the bonds and accepting lower yields, which in theory then transfers into the real economy. And some people are buying cars. And for a while, we're buying stocks. I think they already stopped buying on the stock market. But regardless, if you look at the high-level figures, car sales have gone up quite a bit. And there is already signs of some real estate markets waking up because they reduced the taxation and made it easier to buy a second home. So that means that the economy is finding a footing. Will that mean the official 5% roughly growth rate? I don't think so. And from my trips in the area, consumers and people are complaining that the markets are too slow. So one of the second steps the country is doing is trying to open China for tourism. And they're making it very easy for the outside world to come in. And I like to contrast very much what China is doing with what the West is doing, where it's very difficult to get a visa or you're not welcome in places like Barcelona and things like that. While in China now, it's very easy to do. Many countries don't need a visa, And for me, that I need a visa, I can go in up to 10 days.
Just
So
speak
this
to
is
the point
resulting
of
in more
added
flights.
the added layer of challenge this year. As we mentioned in the first interview with Dr. Wang, and that is, of course, the return of Donald Trump. And if he's been obviously barking about a lot of things and a lot of tariffs that will be part of his policy, but China is very much in his crosshairs to target China with more punitive tariffs than even Biden, who had already put a lot. What impact does that have, do you think, on China's growth target for this year and for its oil demand and consumption?
A definite slowdown. And China will need to redirect and is redirecting towards the Southeast Asian market and also to Latin America and Africa. One of the things I'm very sensitive about in these trips is to observe car dealerships. And I just walk here in Singapore next to BYD. So China is just penetrating the car market very extensively. And
Same here
relative
in
to the
Dubai.
US,
Everywhere you look, there's BYD cars.
So relative to the US, China will underperform, I think, because of all this pressure. But relative to Europe, will massively overperform. And on a net basis, there'll be some growth, not as high as 5%, but some growth. But there is another casualty, and that is gasoline. Because China is pushing out those EV cars like there is no tomorrow. And the adoption rate inside of China is over 50%. The adoption rate in India is also growing. The adoption rate where you live in the Middle East is surprisingly high. And there are dealerships now in Latin America, in Africa, everywhere. So I think as we extend the observation line in gasoline, definitely I would be comfortable in saying peak gasoline consumption is behind us.
In
And right
China.
now, even globally,
Oof. Well, if it's
even
China, I
globally.
suppose it is globally. Let's just take a step away from China, as you have done, as we said at the introduction, across Asia over the last number of weeks. What is the slowdown or is the challenge that China is facing at the moment good or bad news for the rest of Asia?
For the rest of Asia is cheaper products coming in because some of the exports, that machinery that produces all these consumer goods, some of it at the margin will need to be redirected from the US into Europe and into Southeast Asia. And this means deflation. Deflation is good. I like it when a product is cheaper than it was, right?
Yes.
When I have to buy a phone
Especially
and it
after a lot
costs
of
less,
inflation.
yeah, it's less than it was. And in Asia, people here are not so political. They look at the bottom line. They really don't care about the Green New World or global warming
But
of
deflation
all
tends
those
to make
things.
people save money. It makes people nervous. It doesn't make people very accommodating to the consumption habits of growth,
I, frankly, I don't see it that way. Maybe
right?
that's more in a already mature economy, but in Vietnam, where I was just recently in the past few days, if things could cost less for them, they're happier, right? Why not? Then your dollar can go farther. You can buy more things. The quality of your lifestyle improves. So I think Southeast Asia in particular is going to be a beneficiary of the US-China trade war. And
Can
let's
the
not
rest of
forget,
Asia make up for the incremental demand loss of oil from China in 25? Over 30 years now, the engine of incremental demand growth has been China. It would appear that that period is over. Can the rest of Asia make that up, that loss?
no, no, I don't think so. India is doing its best, but India, relative to China in energy consumption, is about a quarter. So even if it grows at 5%, it cannot account for the loss in China. And of course, Indonesia is growing, Vietnam is growing, Thailand is still growing, and they have some economic troubles that I think come from the car industry, but the whole region is still growing, but it's not enough to compensate for China. This would suggest that peak demand, at least temporarily, we saw it in 24. And that
Peak
25 is
oil
going to be a
demand, peak
challenge.
products, or
Gasoline for sure, but I think we could even say in its totality, because
wow.
gasoline is a big sector, and diesel is challenged because of the construction sector in China, and that transfers out into the region.
Let's
So
go to
I
the
don't.
survey question and then get your final predictions, Jorge, for what is the most critical factor shaping China's oil demand in 25? One, sustained economic growth and domestic consumption expansion. Two, impact of trade tensions and global geopolitical dynamics. Three, implementation of government fiscal and monetary policies. That's stimulus we talked about earlier. What is the most critical factor for shaping China's oil demand in 2025? Clearly, this is a question that you could put all of the above, but which of these is the most critical, do you think? Sustained economic growth, domestic consumption in China, the geopolitics, the trade war, bearish. Number one is clearly bullish. Number three is bullish too. One would think, can the stimulus work? The most critical factor for shaping oil demand in 2025. Jorge, your final 2 minutes, your forecast for 2025 for Asia, China demand for oil prices.
I think we are strong ahead of the Chinese New Year because people need to cover what they have. We have also seen that China in particular is buying ahead of a potential weakening of the yuan. So it's better for them to buy to buy oil with a strong yuan now and store it, and the interest rate is so low that you can afford to do that, and that is leading to a surge early in the year. I think as we enter into the Chinese New Year, we will see a slowdown in consumption, and then we're heading into March, which is a period of turnarounds, and we are going to see a market decline in Q2. So strong Q1, weak Q2, and then hopefully Mr. Trump and China kind of sort out the differences and we see a better Q3, but maybe it's Q4. So this year will be full of volatility, up, down, maybe a bad down at the end of Q2, start of Q3, and then a recovery in Q4.
Let's see the survey result of that question we asked here. So 55% of the room thinks impact of trade tensions, the old tariff war, will be the biggest sort of impact on the direction of China oil prices, or not China oil prices, China oil demand. Jorge, you are amazing. I love your new job. I want it. Let's trade. I want to wander around the fields of Vietnam and other wonderful places. You're doing a great job. Really enjoy your posts on LinkedIn and your commentary with us on every occasion we can to get you. That is Jorge Montepeque, really wonderful managing director benchmarks at Onyx Capital Group, doing great work. Thank you, Jorge. Have a great year.